Alright guys, we're back. We got the Swiss versus the Japanese yen weekly chart. I decided to pull the trigger on this one just now and establish a bearish position. I started small. I want to test the water here, but I gotta say this, I'm using a bit of a hunch on this one. I mean, the technical picture is pretty sound, don't get me wrong, but I have to say that I've entered prematurely big time this time, because the trigger level, the official trigger, is 113.62. Take a look. This one is an old one. It's here for quite some time because it's an old trading range. But you can track this one back all the way to the end of 2016. So the fact that price was actually able to break above that level wasn't a very good sign. We actually had a first attempt here on the downside which failed, because I saw price just continues to seemingly crash that 113.62, so I pulled out very quickly. However, I think I'm starting to believe that this was kind of an excess noise on the way up, kind of an overshooting. When price was overshooting itself to the upside, but it's not genuine. That's how I feel. So I decided to come back in. But I still have a big condition on this one. Now I want to take you to the monthly chart, because this is what actually convinced me that it's just an overshooting to the upside, and it is actually just a technical upside correction to the previous downside segment, which was the first segment of the new downside leg. When I say leg, I'm talking about the big setup here, which presents already 3 legs, 4. So we should be seeing the 5th right now. I think we started the 5th with the first move and then the upside correction, and we should see this the second downside segment, the third part in this leg that should take us all the way to the lower section in this setup, starting with level of 109.50, which I plan to use as final destination, so to speak. But I want to show you, like I said, the monthly situation. This is why I got kind of got convinced that this one is heading lower, even though it points higher. At this point, obviously, it's trading higher. Take a look, and I'm gonna zoom in really nicely here. Take a look at that mid-high key level again, 113.62, right? It's the same one. Now we know price came from above. It actually came from the very edge of the setup, right? After it touched base on the top key level. And it came down, and this is a monthly chart, guys, so this is the highest authority. So we had a close very decisively, right, just 2 months ago, below 113.62. That was the first sign that we are on the downside, that the trend is down, and this is just an upside correction. But last month, I think, was even more profound with its behavior, because it was going strongly on the upside, and at some point trading well above 113.62. Take a look where that was the highest spot it actually reached. But as the month got closer to its end, price came back, and take a look, this is where it closed, right? So it kept a lot of respect to this particular key level that was a support. Obviously now it's a resistance. Now what happened this month was a gap. That's what happened. Price gapped from the closing spot last month. It gapped right above that key level. Really interesting stuff. And it started on the downside actually, but it pulled back up. So the fact that it gapped above that key level, I think that by the end of the month we will actually see price leaving a spike here from coming from the upside and closing the month negatively below 113.62, and this would be a huge sign that we are indeed on the way downwards, as I suggest here. That that's only going to enhance our bearish conviction. All right, so like I said, pull the trigger prematurely, but like I said, I got a big hunch here that this monthly setup here, the technical picture, is pretty sound, and I feel that it's going to deliver. So obviously there only needs to wait and see how things will unfold here. In the meantime, guys, have a great trading day, and we'll see you next week.